The world of finance is in constant flux, evolving at an electrifying pace. Amidst this dynamic landscape, exchange-traded funds or ETFs have emerged as a transformative force, reshaping how individuals invest. No longer confined to the realm of seasoned investors, ETFs have democratized access to global markets, offering a simple yet powerful way to build a diversified portfolio. Gone are the days of complex stock picking and exorbitant brokerage fees. ETFs have ushered in a new era of investing, one marked by accessibility, flexibility, and cost-effectiveness. This comprehensive guide will serve as your roadmap as we delve into the exciting world of global ETF investments. Whether you're a novice investor seeking to dip your toes into the market, or a seasoned veteran looking to refine your investment strategy, understanding ETFs is paramount. From the bustling stock exchanges of New York to the tech-driven markets of Tokyo, ETFs provide a gateway to participate in the global economy. Join us as we unravel the complexities, explore the opportunities, and equip you with the knowledge to master global ETF investments. At their core, ETFs are investment funds that trade on stock exchanges, much like individual stocks. This unique characteristic sets them apart from traditional mutual funds. Instead of buying and selling once a day at a set price, ETFs fluctuate throughout the trading day, mirroring the movements of their underlying assets. These underlying assets can range from a basket of stocks representing a particular market index, such as the S&P 500, to bonds, commodities, or even real estate. Imagine an ETF as a basket containing a collection of fruits. Each fruit represents a company's stock, and the entire basket represents the ETF. When you buy an ETF share, you're essentially buying a small portion of this basket, thereby gaining exposure to all the underlying stocks. This inherent diversification is one of the key advantages of ETFs, as it reduces the risk associated with investing in individual stocks. By spreading your investments across multiple companies, sectors, or even countries, ETFs help mitigate losses that could arise from the poor performance of a single holding. Unlike mutual funds that are priced once a day, ETFs offer real-time pricing, providing investors with greater transparency and control over their investments. This feature enables investors to react swiftly to market movements and execute trades at prices they deem favorable. Additionally, ETFs typically have lower expense ratios compared to actively managed mutual funds, as they track a specific index or sector, requiring less active management. This cost-effectiveness makes ETFs an attractive option for investors seeking to maximize their returns. The meteoric rise of ETFs can be attributed to their ability to address the evolving needs of modern investors. ETFs offer diversification, transparency, and cost-effectiveness, making them a beacon of stability and growth. Their simplicity makes them accessible to both seasoned investors and newcomers alike. One primary driver is their inherent diversification, reducing the impact of any single investment. ETFs provide a buffer against market volatility, offering a smoother ride. The real-time pricing mechanism allows investors to track performance and make informed decisions. Lower expense ratios translate into higher returns, fueling ETF popularity. In the intricate tapestry of global finance, diversification reigns supreme as a cardinal rule for mitigating risk and enhancing potential returns. World ETFs embrace this principle, offering investors a seamless pathway to spread their investments across a vast spectrum of assets, sectors, and geographical regions. Unlike concentrating your capital in a single stock or a handful of companies, world ETFs provide a safety net, cushioning your portfolio against the inevitable fluctuations of individual markets. Imagine owning a slice of the entire global economy, from the bustling tech hubs of Silicon Valley to the burgeoning manufacturing centers of Southeast Asia. World ETFs make this a tangible reality, allowing you to participate in the growth stories of both established and emerging markets. This broad exposure helps to smooth out the ups and downs of individual markets, as gains in one region can offset losses in another. Furthermore, world ETFs offer a level of diversification that is often unattainable through traditional investment methods. Building a diversified portfolio of individual stocks from around the globe would require significant capital, time, and expertise. World ETFs, on the other hand, provide instant diversification with a single purchase, making them an ideal solution for investors of all levels of experience and portfolio sizes. By embracing world ETFs, you're essentially adopting a global perspective on your investments, recognizing that economic growth and market opportunities are not confined by borders. This approach allows you to capitalize on the collective wisdom of the global marketplace, harnessing the potential of the world's most promising companies and industries. In investing, every dollar saved on fees boosts potential returns. World ETFs offer cost-effective access to global markets. They passively track market indices, reducing costs. Active managers charge high fees but often underperform. Studies show most active managers fail to beat benchmarks. World ETFs replicate index performance, cutting research costs. Their lower expense ratios reflect this efficiency. Lower fees mean faster compounding and growth. World ETFs' passive nature also reduces trading costs. Active managers' frequent trades increase transaction costs. World ETFs' buy and hold strategy minimizes these expenses. The advent of world ETFs has democratized access to global markets, empowering individuals with the tools and flexibility to navigate the complexities of international investing with ease. No longer the exclusive domain of institutional investors and high-net-worth individuals, world ETFs have opened the doors to a world of opportunities for investors of all backgrounds and portfolio sizes. With world ETFs, you don't need a sophisticated understanding of foreign exchange markets or the intricacies of international trading regulations. These investment vehicles streamline the process, allowing you to gain exposure to a diversified basket of global assets with the same ease as buying or selling a domestic stock. This simplicity and accessibility have been instrumental in attracting a new generation of investors to the world of global finance. Furthermore, world ETFs offer unparalleled flexibility, allowing you to tailor your investments to your specific financial goals, risk tolerance, and investment timeline. Whether you're a young professional seeking long-term growth, a retiree looking for income generation, or somewhere in between, there's a world ETF that aligns with your investment objectives. This flexibility extends to the trading of world ETFs, which, unlike traditional mutual funds, can be bought and sold throughout the trading day on major stock exchanges. This real-time pricing and trading capability provide investors with greater control over their investments, allowing them to react swiftly to market movements and capitalize on emerging opportunities. Transparency and liquidity are paramount in the world of investing, and world ETFs excel in both areas. Unlike some investment vehicles shrouded in opacity, world ETFs operate with a high degree of transparency, providing investors with clear insights into their holdings, performance, and associated costs. This transparency fosters trust and allows investors to make informed decisions aligned with their investment objectives. Most world ETFs are required to disclose their holdings daily, ensuring investors are fully aware of the underlying assets in which their money is invested. This level of transparency stands in stark contrast to some actively managed funds that disclose their holdings only quarterly or even annually, leaving investors in the dark about their portfolio's composition and potential risks. Moreover, the liquidity of world ETFs is another compelling advantage. As exchange-traded products, world ETFs can be bought and sold throughout the trading day on major stock exchanges, just like individual stocks. This feature provides investors with the flexibility to enter or exit positions quickly and efficiently without facing significant price slippage or liquidity constraints. This high level of liquidity is particularly crucial during periods of market volatility, when investors may need to adjust their portfolios swiftly. In contrast, some less liquid investments, such as certain types of bonds or real estate, may be difficult to sell quickly at a fair price during times of market stress. For investors seeking to expand their investment horizons beyond their domestic borders, world ETFs serve as an ideal stepping stone into the vast and often daunting realm of global markets. With a single purchase, investors can gain exposure to a diversified basket of international stocks, bonds, or other assets, mitigating the risks associated with concentrating investments in a single country or region. The global economy is interconnected, with events in one corner of the world influencing markets and industries across the globe. By diversifying internationally through world ETFs, investors can reduce their exposure to the economic and political risks of any single country, potentially enhancing their portfolio's overall risk-adjusted returns. Furthermore, world ETFs provide access to growth opportunities that may not be readily available in domestic markets. Emerging markets, for instance, often exhibit higher growth rates than developed economies, offering investors the potential for significant capital appreciation. However, investing directly in emerging markets can be challenging and risky due to factors such as political instability, currency fluctuations, and regulatory uncertainties. World ETFs mitigate these risks by providing diversified exposure to a basket of emerging market assets. In essence, world ETFs empower investors to participate in the global growth story, tapping into the economic potential of both developed and developing economies. By embracing a global perspective on investing, individuals can potentially enhance their returns, reduce their overall portfolio risk, and capitalize on the interconnectedness of the world's financial markets. While world ETFs offer global diversification, investing in any market carries risk. Like a ship in a storm, global markets face volatility. World ETFs aren't immune to fluctuations, they track underlying assets. If assets decline, so does the ETF. But they also offer upside potential. Economic events impact them. Global markets are interconnected. Crises can have wide effects. Remember the 2008 crisis? It showed market interconnection. A crisis in one region affects all. World ETFs saw declines. Understand market risks. View world ETFs as long-term. Ride out market storms. Reap rewards of diversification. Investing in world ETFs introduces an additional layer of complexity compared to domestic investments' currency risk. When you buy a world ETF that holds assets denominated in foreign currencies, your investment becomes exposed to fluctuations in exchange rates. This can work in your favor or against you, depending on the movement of currencies relative to your own. Let's say you're a US investor who purchases a world ETF that tracks European stocks. If the euro strengthens against the US dollar, the value of your ETF holdings will increase when converted back into US dollars, even if the underlying European stocks remain flat. Conversely, if the euro weakens against the dollar, your ETF's value will decline in dollar terms, even if the European stocks perform well. Currency fluctuations can be difficult to predict and can introduce volatility into your portfolio. A strong dollar, for instance, can erode the returns of your international investments, while a weak dollar can amplify them. This added layer of uncertainty is an important consideration when evaluating world ETFs. However, it's essential to maintain a balanced perspective. Currency fluctuations are a natural part of international investing and can present both opportunities and risks. Over the long term, currency movements tend to even out, and diversification across multiple currencies can help mitigate the impact of any single currency's fluctuations on your overall portfolio. Liquidity, the ease with which an asset can be bought or sold without significantly affecting its price, is crucial in investing. World ETFs tracking major global indices are generally liquid, but niche ETFs may exhibit lower liquidity, especially during market stress. Consider the liquidity of a world ETF before investing, especially if you need quick access to funds. World ETFs are often praised for diversification, but it's essential to assess their underlying holdings. Some may have high concentrations in specific countries or sectors, exposing investors to unforeseen risks. Scrutinize the prospectus to ensure balanced allocation across multiple countries, sectors, and companies. Geopolitical events and regulatory changes shape the investment outlook for various regions. World ETFs are exposed to these unpredictable tides, impacting their value. Diversifying across multiple countries can help mitigate the impact of any single event. Global ETFs offer comprehensive market exposure, encompassing diverse assets worldwide. They provide instant diversification, spreading risk across geographies, sectors, and industries. Global ETFs track broad market indices, ensuring your investment isn't overly reliant on any single market. Regional ETFs allow you to focus on specific geographic regions with significant growth potential. They provide targeted exposure to countries or continents aligning with your investment thesis. Regional ETFs offer granularity, enabling tailored investments based on your outlook. Sector ETFs offer targeted exposure to companies in specific industries. They make thematic investments accessible, allowing you to capitalize on industry trends. Sector ETFs provide a way to express your investment convictions about specific industries. Thematic ETFs capture global megatrends and long-term structural shifts. They invest in companies poised to benefit from themes like technological advancements and environmental sustainability. Thematic ETFs make forward-looking investment strategies a reality. The Vanguard Total World Stock ETF, VT, offers comprehensive access to global equity markets. VT grants exposure to over 9,000 stocks across 47 countries, providing unparalleled diversification. With a low expense ratio, Vermont maximizes long-term returns by minimizing fees. The iShares MSCI ACWI ETF, ACWI, offers a compelling approach to global market exposure. ACWI focuses on large and mid-cap stocks, representing 85% of global equity market capitalization. With a slightly higher expense ratio, ACWI remains a competitive option in the global ETF landscape. The SPDR S&P World X US ETF, GWL, offers a targeted approach to international investing. GWL excludes US-listed stocks, providing exposure solely to international markets. With a competitive expense ratio, GWL is ideal for diversifying beyond domestic equities. The Fidelity Zero Large Cap Index, FNILX, offers a fee-free way to access large-cap stocks. FNILX includes a significant allocation to international companies, providing meaningful diversification. The absence of management fees makes FNILX a compelling option for cost-conscious investors. The Schwab Total World Market Index, SWTSX, offers comprehensive global market exposure at a low cost. SWTSX tracks a broad global market index, providing exposure to companies of all sizes and sectors. With a remarkably low expense ratio, SWTSX is ideal for maximizing long-term returns through low-cost investing. Decoding the metrics, expense ratios, tracking error, and beyond. Navigating global ETFs requires understanding key metrics like expense ratios and tracking error. These metrics are the vital signs of an ETF, indicating its health and efficiency. Lower expense ratios mean higher net returns, while tracking error shows how closely an ETF follows its benchmark. Analyze these metrics to find ETFs that align with your investment goals. Section 2. Aligning with your goals. Choosing ETFs based on risk tolerance and investment horizon. Just as a seasoned captain charts a course based on the prevailing winds and the ship's destination, so too must an investor choose ETFs that align with their risk tolerance and investment horizon. There's no one-size-fits-all approach to ETF investing. The right choice for one investor may not be suitable for another. If you're a conservative investor with a low risk tolerance, you might gravitate towards global ETFs that track broad market indices with a long history of stability and dividend payments. These ETFs offer a smoother ride through market fluctuations, providing a sense of security and a steady stream of passive income. For investors with a longer time horizon and a higher appetite for risk, growth-oriented global ETFs that focus on emerging markets, specific sectors, or thematic trends may hold greater appeal. These ETFs offer the potential for higher returns, but they also come with increased volatility and the possibility of greater short-term fluctuations. It's essential to strike a balance between risk and reward, choosing ETFs that align with your comfort level and your investment goals. If you're saving for retirement decades away, you can afford to take on more risk in pursuit of higher returns. However, if you're nearing retirement or have a shorter time horizon, preserving capital and minimizing losses may take precedence. Remember, diversification is your ally in mitigating risk. Consider allocating your investments across multiple global ETFs with varying risk profiles and return potentials. This diversified approach can help you weather market storms and achieve your financial goals over the long run. Section 3. The Power of Research. Navigating the world of global ETFs with confidence. In the dynamic world of global ETFs, knowledge is power. Arm yourself with thorough research, understanding each ETF's strategy, performance, and costs. Think of yourself as a detective piecing together clues. Don't rely solely on marketing, dig deeper, consult independent research. Understand the ETF's investment objective and strategy. What index does it track? What are its underlying holdings? How frequently does it rebalance its portfolio? These questions provide insights into the ETF's risk profile and growth potential. Analyze the ETF's historical performance, but remember, past performance isn't indicative of future results. Look for consistent performance over time. Compare the ETF's returns to its benchmark index and other ETFs in the same category. Understand the ETF's associated costs. Scrutinize the expense ratio, trading costs, and potential hidden fees. Even small differences in costs can compound over time, impacting long-term returns. Empower yourself with knowledge to navigate global ETFs confidently and align with your financial goals. Section 1. The Prudent Investor's Path: Informed Decision-Making for Long-Term Success. As we conclude our exploration of global ETF investments, one central theme emerges as the guiding principle for success-informed decision-making. The world of finance, with its myriad investment options and ever-shifting market dynamics, can seem daunting, but armed with knowledge and a disciplined approach, you can navigate this landscape with confidence. Think of yourself as an architect, meticulously designing a portfolio that aligns with your financial goals, risk tolerance, and investment timeline. Global ETFs, with their diverse offerings and inherent advantages, serve as the building blocks for this portfolio, but the onus is on you to select the right materials and assemble them thoughtfully. Don't fall prey to the allure of quick riches or the herd mentality that often grips the markets. Remember, investing is a marathon, not a sprint. Slow and steady wins the race, and a disciplined approach, grounded in thorough research and a long-term perspective, is more likely to lead to sustainable success. Before investing in any global ETF, take the time to understand its investment objective, underlying holdings, expense ratios, historical performance, and potential risks. Compare different ETFs within the same category, consult independent research reports, and seek guidance from qualified financial advisors if needed. Section 2. Embracing the world of opportunities: global ETFs as building blocks for a resilient portfolio. Global ETFs, with their remarkable versatility and inherent advantages, have democratized access to the world's financial markets, empowering individuals to build diversified portfolios that align with their unique investment objectives. Whether you're seeking long-term growth, income generation, or a combination of both, there's a global ETF tailored to your needs. Imagine owning a slice of the global economy, participating in the growth stories of both established giants and emerging stars, all through the convenience of a single investment. That's the power of global ETFs. They provide a gateway to a world of opportunities, allowing you to capitalize on the interconnectedness of the global marketplace. However, remember that investing, even through seemingly simple vehicles like ETFs, inherently carries risks. Market fluctuations, currency movements, geopolitical events, and regulatory changes can all impact the value of your investments. Diversification, both across different geographies and asset classes, is key to mitigating these risks and building a resilient portfolio capable of weathering market storms. Embrace the world of opportunities that global ETFs present, but do so with a prudent and informed approach. Conduct thorough research, understand the risks involved, and invest for the long term. By embracing these principles, you can harness the power of global ETFs to build a portfolio that stands the test of time and helps you achieve your financial aspirations.